Nobody move and nobody gets hurt. This is a stick up by Jerry and Adrian, the Legalized Robbery podcast.
Robbery, your boys
Another
are back
one
from a hiatus, back
Yeah.
and ready to mingle and tangle and whatever else you
on
want
the same continent.
on the same continent. Yes, indeed. I moved to Berlin. Greener pastures, hopefully. We'll see. And that's why there was a little break the past 2 weeks, and I was also quite ill actually. But yeah, now we're back, better than ever, in all white, without really discussing it before.
Yeah.
Yeah, so that's telekinesis or telepathy.
Telepathy, dude. Telekinesis is moving
It's
shit.
it's
But
where you're
yeah.
moving the shit
Yeah,
around,
yeah,
right?
yeah. It's good. It's good.
Okay. So how are you doing, Addy? How you been? What you been up to?
Uh, I'm good, but I have been investing way too much time and money in crypto lately.
In crypto. I mean, it's the place to be.
Yeah, dude, but it's too much. It's just I feel it's too much. If the market goes down 90%, I'm
Overexposed.
gonna die. I'm gonna die. Yeah.
Yeah. Oh, well, it's not so much about crypto as it is about just being diversified in things outside of that, I guess. And that's why even one of the
Yeah.
guys was talking about Airbnbs and stuff like that. Maybe one day we'll talk about like flipping, or like the Airbnb game, flipping houses, whatever, because that's legalized robbery too on one level.
It is, but you need the capital. Like what I'm doing right now is I'm trying to invest in some newer projects in terms like small market caps, a
Yeah.
few million, maybe tops tens of millions. Like so
Right.
they have room to grow, in terms of exponential growth.
Right.
So yeah, I'm trying to find the next winner for the next few years. So it's interesting. There's a lot of upside potential, but yeah, it's also super risky because I am at least basically investing in unproven businesses, basically. But their thesis seems quite interesting and potentially profitable. So I'm willing to take that risk. But yeah,
Yeah. I mean, I know what you mean, but I was talking more like completely outside of even stocks or crypto, like things to diversify out of that. But
yeah, no,
I
no, no, no.
myself, I myself haven't so much. But it would be something interesting to talk about, like in the distant future, maybe in the near
Yeah,
future. Who knows, man? Who knows how things go? But
I would do it. The problem is I don't have the capital for it. It's not like flipping houses is cheap. Like even if you get a loan or if you try to figure out some mechanism in which you can access some somewhat cheap money, it's still
yeah,
not. You still need a big amount of money, even for
yeah,
collateral and shit. So it's definitely out of my current pay grade. But yeah, in time, sure, why not? Diversification is important, even
yeah.
outside asset classes.
I would say there's an interesting way of doing things when, say, um uh, uh, because I'm just replying to what you mentioned in terms of having enough liquidity to do that kind of thing. um there's interesting examples of people that don't have that liquidity that still do it. Like one of my friends, she figured that her mom is moving to the same city as her, so she would either rent out one of her rooms and then stay at her mom's whenever she gets Airbnb booked.
Mm-hmm.
And then she would sort of create passive income sort of sporadically.
Mm-hmm.
Um, and she got bookings really quickly. So all she does is pretty much tidy her space. It gives her an incentive to even invest in making her own personal living space look really good. Because she would then, I don't know, go for a weekend to her mom's, and have somebody stay in Airbnb, come back, get the little bit of money, have that little bit on the side, and then reinvest it. So that's, in terms of legalized robbery, that's an idea for anybody
Maybe.
that might have
Yeah.
either a spare room or an apartment that they don't have to be sort of they don't have to be in like 24/7, 365.
Sure.
So
Sure.
yeah, just some thoughts on diversification outside
Yeah.
of crypto or stocks. But the highest yielding opportunities seem to be in stocks and crypto
In
right now,
crypto.
well, particularly
I
crypto.
mean, yeah, in crypto compared to stocks, dude. Yeah.
I wouldn't say that. We talked about uranium in our last podcast, and I mean, look at what that did in that
Yeah.
time frame. I mean, it was complete 360 by all of the countries and stuff like that, and even ETFs are doing double digit numbers and stuff like that. It's
Yeah.
pretty crazy. So whoever was listening to that pod, well, it just came out last week, I think. Whoever was listening to that pod and aped in uranium stocks, I think they'll reap the rewards. I've seen that in my portfolio at least. All of my uranium picks are doing pretty well.
Yeah. Cool.
Yeah. So what we're talking about today in particular is new coins that we invested in. Particularly Terra and the Luna coin, the entire Terra ecosystem we touched on in one pod. And yeah, since then has done incredible numbers as well. It's obviously leveled a little bit now and is sort of a little bit sort of hibernating, but this is the best time to be accumulating, really. Then we'll talk about types of launch pads in crypto, and then we'll talk about investing for uncertain times, given that there's a sort of looming supply chain crisis. And the chip shortage that we covered previously has only intensified since we covered it.
Yeah.
So investing and what assets you can invest in around those times, we want to talk about, particularly the volatility index, the VIX.
Yep.
So shall we start
Let's start.
with our new coins? Which one would you like to start with? I think you're most sort of excited about Anchor, right?
Yeah, Orion.
Talk about Orion first.
Yeah.
Actually, no,
So
Anchor is a better starting point because it's a good segue to Orion.
yeah, actually, I wanted to present Anchor anyways, part of the Terra ecosystem. But
Perfect.
yeah, I think I'll do Anchor first, and then we'll talk about Orion. I can actually, well, not only can I actually want to share my screen because I think it's, yeah, you'll understand why. Let me just
Yes.
1 second. Okay, can you see it? Wait, let me enable it. Yeah, right? It's visible.
Mhm.
Cool. So first off, this is the landing page. It's nothing special. They have some animation, whatever. Yeah, I won't even get into these because basically anybody can see it by themselves. Yeah, it's not the page lagging, it's my screen. So yeah, but this is Anchor Protocol. What Anchor Protocol is a coin built on the Terra ecosystem, which is meant to be, actually we discussed it before when we did our Terra bull case. So it's meant to be a stable coin yielding protocol. And I have been researching it so much in the past, again, like I said, 2 weeks, because first off, I actually added some money into it recently. So, and I wanted to do some due diligence before putting my money in. But then again, I even just wanted to understand how it works for myself. So in a nutshell, as me and Jerry, we were having a discussion whether it's just the staking itself or the borrowing itself where you get rewarded. And actually, surprisingly, we were kind of both right in the sense that on the receiving side, you are just getting basically DeFi and staking rewards. However, on the borrow side, Anchor does something super interesting, which is incentivize people to borrow, which might sound like a Ponzi scheme, except that it's basically algorithmically balanced in such a way that basically when it is lacking borrowing power, it's doing this extra minting of Anchor protocol to incentivize it. But then when there is enough borrowing happening, it will reduce these rates. So besides the whole balancing mechanism of Luna and UST, as we mentioned before, there's this balancing mechanism of Anchor with its DeFi, which is super interesting, and it kind of makes things slightly complicated because you have algorithms behind, and yeah. But what I will show you is, this is one of the things. By the way, for the people who don't know, governance usually refers to the DAO of a blockchain and how you can control what happens to the blockchain. For example, if you are to negotiate or work with the bank, you have no control over what the bank does. This is super interesting in crypto because you can basically own a stake of the crypto you're investing in, be it as a lender or as a borrower, which I think is amazing. And I saw this while I was investigating the platform, that they had some governance vote. And look, they literally have had votes on whether people invested into the token want to increase, for example, what the liquidation threshold should be, or what the capital efficiency on Anchor should be. So basically, this borrowing and these rates they're offering, it's not magic, and it's actually decided upon by the members of the platform. Now, of course, you can always ask the answer: do members of the platform know what's best for them? And maybe not. But if you do assume that these are smart people, I think it kind of gives a bit of control, you know. So I think that's a nice thing. Yeah. And somehow I managed to talk about it without actually saying what it does. Basically, what it does is I go to this page, and I deposit an amount of dollars, of USD dollars, from the Terra ecosystem. And basically, I get a fixed APY based on this balancing mechanism I was talking before. So if you put $1,000, you will get $196 by the end of the year. Basically, that's the idea. And how does this happen? So like we mentioned before, what happens is once you deposit this money, in the back, Anchor will use the bonded collaterals that they have from users who have borrowed money to make them generate yield by staking. So this is a bit to take in, but this is one of the balancing mechanisms, and the source of the money is the staking from these assets. And then it's the borrow APR, which is the amount of money the people who borrow are being charged. So yes, again, you have these two parts which generate money for you as a lender, yes, basically. So that's cool.
To put it another way, the Anchor token is designed to capture a certain size of the yield available, and then scale with assets under management through borrowing and whatnot.
Yeah. So
and staking.
It's part staking as a source of revenue, and the other part is the borrowing, the DeFi aspect of itself. Because if for example, look, this is the net APR. As you can see, it's green and it's positive, meaning that right now you get paid to borrow, which is insane. And you would think it's not okay, but the reason for that is because you have distribution APR, because they are distributing Anchor protocol for the money you lend in order to stimulate the lending, so that they can do the payouts in the earning. And again, this thing, if it were to remain like this, it wouldn't be sustainable. However, we have seen on other platforms that do DeFi, borrowing is sustainable, and borrowing would work in the long term if there was enough demand. And in the past few weeks, actually there hasn't been a lot of demand in the Terra ecosystem, unfortunately. I don't think it's getting the attention it deserves. As you can see, it's basically flat for the last year. So I think one of the reasons why Anchor is behaving like this is because the ecosystem is not getting enough attention. However, if this changes, I think Anchor protocol will be a game changer and a revolution. So yeah, this is basically in a nutshell Anchor, and maybe there's always new things you can find out about it. It's not something probably you understand the first time you read it or you hear it. It's a bit complicated, it's a bit complex. You need to dive deep yourself and just read through it because it's complicated, the whole balancing mechanism. But yeah, this is, first off, let me just say this. Dude, the interface, like seriously, it's
great.
so fucking clean, dude. Like, I do front end, but it's not my passion, but I just have to appreciate this, dude. This is like, it's super simple, it's super clean, it's super, dude, I'm thoroughly impressed with it. Everything,
it's
dude,
following, it's following the steps of the Terra native ecosystem, which we'll get to later, obviously. But can you turn the page normal again, where we have the split screen? I just want to summarize for the viewers, in a really short sort of way, what Anchor is. So the reason why Anchor can provide you with a fixed APY rate is because when Anchor earns more than 20% of the yield that is happening on their platform.
I forgot to say about that, but
exactly, they then allocate the excess yield in the UST denominated yield reserve, right? UST being the stable coin of choice of Terra, and this then allows them to do that.
Sorry.
Yeah.
I just reshared because actually, since the platform is so clean, you can basically see it here. Everything is in plain sight. Nothing is hidden or secret. This is it. So they currently have 67 million in reserve. So if anything happens and if it's not sustainable because the borrowing isn't there, they will just use this reserve to do the payouts.
Exactly.
So this is what you're talking about, the yield reserve.
Yeah. So when they go over the yield, they use the excess yield to put that in the reserve. When they go under their rate, they tap into that reserve, which is it's crazy that nobody's thought of that yet, because everybody's trying so hard to get you the highest possible APY rate, but it's variable to like a crazy extent, where you have like 20,000 million % one day and you have minus whatever. There's no minus. Oh, is there minus? There's probably minus, right? No, there's no minus.
It can't be. No.
Yeah, it's just a coin that depreciates and
the coin itself can go to zero, but there is no minus.
Oh yeah, and we can't talk about the sort of benefits of this without talking about the risks. So the risks associated is that the company just goes, or the group, or whoever is doing it just goes busts, and doesn't actually have in reserve the amount that they say they have in reserve. For that, however, they have an insurance.
We won't even go there. So again, like I said, I've done a really deep dive into this. Apparently, where they hold the money you are putting in to earn yield on, it's separate. It's separate. Like they cannot access it, they cannot tap it, they cannot control it. So theoretically, if the network doesn't go down in the sense that the validator, I mean, it's in their white paper. I mean, I haven't checked it because I haven't done a security audit, but they have had audits on their project.
By who? The SEC?
No, independent crypto auditors.
Okay.
Just like the other projects in the crypto space, and you can see this. So I'm not sure exactly what they checked, but they are audited. And since they claimed this to be true in their white paper, I would assume it might also be audited. But then again, that might be fake. But then again, if you don't assume a rug pull or anything malicious from their point of view,
Right.
this is super safe. So even if the network, except if the network goes down and there aren't any validators to basically confirm the transactions on the network, potentially even then you could withdraw your money safely. Again, I'm saying potentially if there's nothing bad happening in the background. But like you said, there is insurance. Continue.
Yes. So if you're looking to put your, well, first of all, actually, we should probably do this disclaimer. This is not financial advice. Do your own research. But
No,
yeah, if you were to
seriously
do,
do it, because otherwise you won't have the conviction to put any money in, believe me, because it seems a bit magical. So honestly, I think I put like $100 in first off. I was like, I don't trust this shit, and then I did the research. Then I put some more into it. But yeah.
So yeah, like I said, we can be as sure as ever on this, and there could still be something that we missed. So I would never give somebody 100% assurance on anything. Nothing is for certain, especially not in this climate.
Sure.
But if you're taking a calculated risk, if you did the research, if you looked at all of the potential risk factors, and wanted to double down on being sure that your money's safe, you could also take an insurance. And if for people that are looking to put like immense amounts in there, I think that would be the smartest thing to do, to get an insurance in addition to that, by a separate entity. And I think they offer like a few on the platform that allows you to do that. Yeah.
It's actually here. Like I said, dude, seriously, I did my due diligence. It's right here, and you basically get a few options. And first off, this one is more, I think, regarding the whole Terra ecosystem, in the sense that it guarantees the fact of the UST peg, because as we mentioned, the UST is algorithmically generated. I'll spare you the detail and the whole platform. Basically, what they say is that if by any reason the UST goes under $0.86, so if it depreciates like 14%, you can claim some of that money or all of it. I'm not sure, but it's like an insurable amount, and you would get the money you lost on that. And these are for the smart contracts that you're investing in. But I just wanted to do this just to show everybody how simple it is. Like it's here. It's not hidden. It's there.
Yeah. Is there a thing such as insuring your insurance?
Well, no. But
does that exist?
In real life?
Insuring your insurer.
I think in real life there are things like this, yeah, but I don't think it's the case for this one.
Okay, they don't have to say, because as one of the wise philosophers of our time, rest in peace, Christopher Wallace, also known as Biggie Smalls, the notorious B.I.G. said,
Yes.
I got lawyers watching lawyers, so I won't go broke. You maybe should
Smart
look for
man.
insurance that's covering your insurance, just to be safe. But without further ado, we move on to the next stablecoin that is offering outsized yields and APYs.
Let me just say this. Yeah. It's super interesting, because I went even deeper, because why wouldn't I? And basically the insurance itself is a crypto project, in the sense that there are people staking money so that you can get insured, which is kind of odd, because if you would ask me, are you willing to put some money down in order for other people to insure their goods? And I was like, no, what if that shit fails? But it's like, somebody has some conviction in Anchor protocol, enough conviction to basically put their money and insure other people. And I will say this, that the insurance prices range from 1% to 4%. So even if you do a back of the envelope calculations, you basically have 19% APR, you put another, let's say, top 4% insurance, you're still left with 50% APR. I think that's kind of good. Like, I think in terms of calculated risks, that's not a bad one. That's not a bad one.
Yeah, I agree. So
Let's go into Orion.
let's go into Orion. So basically, Orion is another project built coming out of the Terra ecosystem. It lives on Ethereum mainnet as well, but it was birthed out of the Terra ecosystem and also very brilliantly made. It's taken similar sort of benefits and concepts of Anchor protocol, but is it's sort of democratizing it into a stable rate, savings rate outside of the Terra ecosystem into other chains. So this includes USDT, Tether, the famous one that we know, USDC and the Circle people, and then BUSD from Binance, and then DAI, and there's a lot more. And what they're basically doing is they're allowing for people to come onto their platform and transfer any of these stable coins that I just mentioned on there and stake them to get stable savings rates upwards of 12%, all the way up until maybe 20%, I believe. I think there's a rate right now that's going like
Yeah,
16.
I'll share it.
And the project is really obviously interesting how they managed to do this, but pretty much they wouldn't exist without Anchor. They took what Anchor did and sort of broadened it out, which was really smart. They have top VCs, which will show sort of images of, and it's right now it's giving the best interest rates that I at least know of. In on its platform in the crypto space, and the coin itself is performing really well as well. I'm not sure what it's at right now, but yeah, we watched it, all the way from its initial ICO, IEO,
No, IEO, yeah.
IEO, yeah, not ICO.
Yeah.
Yeah, fuck ICOs. IEOs, yeah, and I think we bought in a little bit early, semi early, and watched it rally all the way from I think under $1 to now $2 something. It might be under again now because everything's
Yeah, it was
pulling.
hovering around $2. Let me just
Yeah.
check. Yeah, it's 169 now. So yeah, it dipped
Okay.
quite hard. But yeah, it was fluctuating. So yeah.
Yeah. So as of Monday 18th, yeah, it's done a moderate, you know, increase, I'd say. And yeah, so that's Orion. We'll add this onto our description.
Mm-hmm.
Anything you would like to add on Orion?
I will just like to show it a bit, the platform. So
Yes.
the product itself is not live. I just wanted to share the platform and just show people how it looks. Again, super clean, super nice. It's like interactive and shit. It shows the possible coins they'll have in the future. So it's not just Ethereum. It's also Binance, and it's also obviously USD if you want to go through them. And basically, yeah, it explains how it works. And yeah, obviously, it in the background, it converts or bridges the stable coins you are putting into USD, right? So and then using that USD, it deposits that USD into Anchor. So basically, this will be feeding the whole Anchor ecosystem even more. Obviously, the question raises, shouldn't there then be basically Orion borrow? Because you're just going to have demand on one side. But yeah, who knows? Maybe somebody is coming with a borrowing product to stimulate the borrowing on Anchor. But either way, so far there seems to be a lot of interest into Anchor. So I think this is bullish for Anchor itself. And like you said, these are the APIs, the APIs they're giving. So basically, the API is dependent on how much Orion you have in your portfolio relative to the amount of money you're investing. So the
Yes.
more Orion you have, the bigger yield you get. But it's interesting. So first off, look at this. Basically, they're giving out 16%. As we know on Anchor, it's now 19.4. It hovers around 20. So basically, this protocol itself will be holding on to some of the gains, which is nothing bad about that. I'm just saying that this might be a profitable protocol in what they do. And also, look at this. It's APY in Orion tokens. So basically, they will try to leverage this idea, and instead of paying people in whatever currency they staked, they will do what this says, which is a token generating effect or something like that.
Event.
Basically, they will mint Orion. So it's super interesting, dude. Like this whole thing is, if they make it, if Terra and Anchor are a successful project, they're gonna get so huge. And as we mentioned in the last episode, the minting of a UST basically boosts Terra. So if you're gonna have all this stablecoin pressure from BUSD and Ethereum coming into UST, the question is, what will this do for Terra? And the obvious answer is send it to the fucking moon, because you need Terra to mint USD. So I'm super excited, dude, for the future.
Yeah, and to build on what you said, what will this do for Terra? I think Orion and Anchor, being that they both evolved out of Terra, Anchor just simply being a great product, financial product itself and solution. But Orion, I would say, might even be bigger for Terra than Anchor if you think about it, because Orion would turn the Luna ecosystem um, and evolve it from a single chain into a multi-chain ecosystem, because it's opening doors to obviously USDT, USDC, BUSD, and DAI, and that would catapult Terra if that becomes successful. So Orion is a great play. So outside of having stable APY for your stable coins, Orion as a coin, because of that, would be and it would be quite good, as well as obviously Luna. So all
Yep.
of this coming together is like very bullish for Terra, I would say.
There is one slight problem in this whole thing,
Hmm.
and that thing is called the Terra Bridge. So you can basically do what Orion is doing right now. Right now, so you can bridge stable coins, wrapped stable coins from these ecosystems. So you have wrapped UST on Ethereum and wrapped UST on Binance Smart Chain, and you can bridge them to Terra and just go into Anchor yourself. But
Right.
let's just say this might be a bit too much for people, and I assume most people who are in crypto wouldn't consider this to be too much. However, it does require some know-how, and maybe not everybody wants to go to the whole hassle of doing it, but it can be
Yeah.
done.
Yeah.
So just wanted to say that, yeah, Orion could be a super big success. I was just saying, if anybody has some UST now, you can bridge them. And yeah, the thing is called Terra Bridge. You can bridge your USDT to Terra, and then with USD. But yeah.
There's this quote by I forgot this trader. His name is Joseph. And what's crazy is that he said that if you can figure out a way in the stock market to create a stable 20 to 25% returns year on year, you have found the holy grail.
Yep.
And it's kind of messed up that if you did basically just buy shit on Anchor and then just get that secure APY savings rate, you essentially have beat most investors already.
Oh yeah, yeah,
And that's a scary, I mean, that's scary for professional people.
yeah, yeah. It is.
Um, because this undermines their, I don't want to say their life's work, but yes, if Anchor, you know and the first counter argument is, this is not, we claim that it's stable, we claim that it's secure or whatever, but it's not as secure as we think. Like things in the financial world are more, like, deep value stocks, they would say are more, secure than that. But I would beg to differ, when you include, the insurance aspect of it, when you include a bunch of things that you can do to, make sure that those funds that you put in Anchor are safe. That would be, yeah, the answer to that. So yeah, uh, I don't even know where to go from there, man. This really might be the holy grail. Who knows?
Again, dude, there are some risks here, and we don't know how this protocol will behave. If, for example, if it has, again, currently it has like 2 billion in Anchor. That's the TVL locked. It's not shabby at all,
Yeah,
but we won't know how it would react if it had 10 billion tomorrow
yeah,
with nobody borrowing.
massive
Basically, that
downturns, and
yeah,
we don't know how the insurance would act. Like, all of
sure,
this needs incredible stress testing in some virtual environment or the real environment to
yeah,
really be a sure, long-term investment.
yeah,
Because,
absolutely.
if you take a deep value stock investment, you know that it's going to be here 10 years from now. But while we are saying all of this stuff about Anchor and stuff like that, can we really say that about Anchor like we can say that about what is a deep value, investment right now? I don't know, man. Like some, McDonald's or something. Okay, I don't know why I said McDonald's, but probably to fucking Warren Buffett it is. People will
What's
always need
the
McDonald's.
not Palmolive, that huge PNG, right? Procter and Gamble. I think
Procter and
Procter and
Gamble, yeah,
Gamble might be here in the next 100 years because
exactly.
they fucking do shampoo and soaps, so they're
Yeah,
good.
yeah.
Not
So
much innovation coming in that area, I think. Well,
yeah,
at least we
so
don't know of any.
yeah, I just want to correct the euphoria that we just built in people,
Yeah.
and like super duper fundamentalist fucking people, will come bashing at you, claiming that this beats their benchmarks, in the long term. But yeah,
Again, dude. Again, long story short, I can draw up a scenario in which Anchor doesn't work, but I can also draw up a scenario in which Anchor does work. So I don't think that's bad. I think that's pretty good. Like if Anchor does get
no, I
adoption
mean,
on both sides, it's a valid project.
yes, absolutely.
But yeah, let's go on.
Cool. So the next thing we wanted to discuss was it, the IEOs that you wanted to discuss, and the, ISOs, IDOs, all of the different launch pads.
I think no. I think we said we will discuss the bigger Terra ecosystem now.
Oh, apologies. Yes, Terra.
Since we're here, maybe it's not so. I think it's a bit. It's good, right? Or you
Yeah, Terra
wanna?
ecosystem is perfect. I mean, Terra ecosystem. Obviously, we covered it um, in our previous podcast, but we'll take a sort of deeper dive today and look at, um, yeah, other things they've been up to, other things they're
Yeah,
doing. Recently, they did the Columbus, update, which,
yeah.
allowed many more, projects to start on there. So yeah, let's get right into it.
Let me just show you this. So first off, the thing I was talking about, it's called the Terra Bridge. This is the one I was talking about. So for example, look, you can send assets. Yeah, it will make me connect my wallet, but I don't have a wallet here. Oh, wait. Okay. So basically, see, I basically this is a bridge from Ethereum to Terra, and you can specify what kind of asset you want. So basically, you can have bridged coins from Ethereum to Terra in Luna or UST itself. This is just to show that, again, you can do what Orion is doing right now. But yeah, it's maybe not that easy. People don't understand what this is happening. Maybe there isn't all this trust. So yeah, maybe this won't be the adoption. That's why Orion exists. And another one is, look at this, Terra swap. This is basically a swap. I think this is actually operated by the Terra Labs itself, because basically it's super simple. It only does this. You only have the swap and the liquidity providing, and that's it. This is super simple. Like, usually the DeFis and the decentralized exchanges, there's so much more. They have a lot of shit on their screen, but this is simple. This just works. You don't need to understand what it does. You just need to exchange from Luna to UST, and that's why you're here. There's nothing more you need to know, and that's amazing, dude. I think that's super amazing. Now, what I like most about this whole ecosystem is the fact that I think, I haven't checked this yet, although I said I would, I think they're using pieces of each other in their projects. Because look, for example, on loop markets, you have this swap. If you go to the Terra station, you have this swap here. Of course, it's not showing for me because I don't have my wallet connected. My point is, they are using Terra swap inside their products. Dude, this is amazing, in the sense that these are all other projects who are like, why should we create our own stuff when we can just leverage existing products?
Yes, absolutely.
Amazing.
And make it all look seamless. I mean, this is why I said that Terra is one of the only coins that has Apple-like sort of vertical integration. They make it look all seamless, and obviously we'll get to how their station looks like. But the fact that they have a working web browser, highly rated, working iPhone app, as well as Apple Store app. Apple Store app, and then Google
Android
Play.
as well.
Exactly.
Yeah.
And then have a working desktop for both Windows and Mac. I mean, the vertical
And the Chrome
integration.
extension.
Yes, and a Chrome extension. The vertical integration and seamlessness across all of these is beautiful, and we'll get into that in just a minute.
Yeah. So, dude, again, this is one of the most. It's like reusing parts of the ecosystem instead of rebuilding them from scratch allows you to focus on what's important, which I think is pure genius. So yeah, I assume they do it. They know about this, and they're not just doing it secretly. So I think it's one of the core principles of the ecosystem. So yeah, unfortunately, I don't have the station installed on this machine, but yeah, basically this is the Terra station. This is what you would call their wallet, but this is so much more than a wallet. Again, this is like a full app in itself. So basically, like we saw in Anchor, you have this metrics here. They have metrics regarding the staking return, the transaction volume, the tax rewards, the total accounts. You can basically see how the token is performing just by looking at these. And I think this is quite awesome. But now multiple projects have this. For example, I've seen the same kind of similar metrics on Cardano, for example. So that's good, still impressive. Then you can have the wallet. Usually the wallet is nothing much than your assets and how much you're holding of them. So that's not super impressive, but still it's clean. You would have the transaction history, which is the actual transactions on the blockchain you executed. And this is something I want to talk about, but actually I'm gonna get to this at the end of the episode, when I'm gonna talk about initial staking offering. I'm just gonna mention it now. Basically, initial staking offering means that instead of you staking and getting the reward yourself, you are staking into a staking node into a validator, and they are getting your return. However, when they do launch their protocol, you would get an airdrop. So it kind of allows you to invest money without actually investing money, in the sense that you're not giving it to anybody. You're just sacrificing what I would think is it's a small yield, because the yield is not big. It's 4 or 5% on Terra, for an airdrop, which could probably be valued at a couple $100 if you're lucky when the token launches. So yeah. For example, one example of this is,
well, the most prominent example is Orion Money, the one that we just talked about, is planning to do a airdrop.
Orion is still here, right?
Yeah,
Orion is still here. So basically, yeah, this is Orion Money. So if you had staked Orion Money, and I think if you still do it, you will get airdrops. You will get half the airdrop when they announce the airdrop, and then you would get the other half in the next 6 months, which is kind of nice. But I think this is a super interesting way of investing. For example, I have added money into these into these staking pools. For example, Talis Protocol, Neptune Finance, Angel Protocol. They're all gonna be projects on Terra, and I added some staking into them. I think that's kind of nice. I'm gonna get some free coins. I'm not sure if they're gonna be worth anything, but they will be free for me. So I think that's pretty cool. Like I said, this is the Terra swap. It's integrated. It's not visible because my wallet is not connected. This is the governance, which is basically like the anchor is the DAO, is the way the platform is managed. As you can see, this will soon end. This is basically inter-blockchain communication for the Atom, for the Cosmos ecosystem. They're having a vote. It's, I think, a pretty big majority. Yes, it's no
100%.
No, it's not 100%. I'm not sure why it's like this. Oh no, see, it's 76% voted, and it's 100% yes. Okay, so yeah, it's 100% as well. So, but no, because I saw this number, and this was the minimum required Terra to start the vote. So I was like, no, but yeah. Anyways, so yeah, this will definitely be applied because it's the core principle of the Cosmos ecosystem. But yeah, and then these are you can check smart contracts that are written in the Terra ecosystem. It's not relevant. So yeah, this is their wallet / dashboard / access point for the whole ecosystem, and I think it's quite nice.
It's pretty swell.
Yes. Now I'm just gonna do a super fast run through because I just want to mention this project, but we don't have time to talk about all of them because it's just too much.
Just mention the most exciting one.
Yes,
I will start 100 bagger.
100 bagger? I think Pylon will be 100 bagger. The TLDR for Pylon is super simple. You have money, you want to invest it, but you don't want to give it.
What does TLDR mean?
Too long, didn't read. Why? You think it's not a good context here? Oh yeah.
No. I literally just said that because you never know who's listening who doesn't know what you're talking about.
Wow. Okay. Cool. So, Pylon Gateway. What is Pylon Gateway? This is a hybrid of a launchpad, because apparently launchpads are the shit now. Basically, what Pylon does is they incubate and they provide extra funding for projects in a very ingenious way. So you have the projects here. They're super nice, super cool. For example, let's take Loop Finance. Look, as you can see here, you have to deposit UST. If you have UST, you can deposit these USTs into a pool which have a fixed vesting period, meaning that you won't be able to take them out. And they provide this APR in the Loop Finance token. So far, so good. Nothing so far is new. What is new is the fact that this USD that you're giving them, you will get your USD exactly the same amount back when this vesting period ends, and you get the APR in the loop finance. Now, guess what they do with the USD?
Well, obviously investing it, right?
Where?
I don't know, into their project. Oh, into Anchor.
Yes. Basically, what
Oh,
they thought
interesting.
is, yeah, if we're getting people to give us money, what would be a safe way to generate money for the project? Invest it into Anchor. So
Holy
basically,
shit. They're
yeah.
leveraging.
Yeah, dude, everything is leveraging Terra, USD, and Anchor. Dude, I think all the projects in this ecosystem will leverage the shit out of them. So
Out of
again,
each other.
yes, they either will all fail or it's gonna be a revolution. Yeah, it's so exciting. It's fucking scary, dude. Like, yeah. But yeah, basically what happens is for this 18 months, you basically tell a company, I am giving you this amount of money. Anchor will give you 20% of that money per year. For example, in this particular case, they would be getting 35% of my money as liquidity to do whatever they want with it, which is a form of investing. Dude, I think this is amazing. Like, if Anchor works and it doesn't fail, this provide projects with liquidity they need to do whatever they want while not being able to touch my money in real terms. Like, my money would be locked in the smart contract. They
But how are
wouldn't
they
be able to.
using? What I don't understand is how are they using that to invest in their own project then if they're locking it away?
They're getting the yield from Anchor from my money. So instead of me getting 35% per year, they are
Oh, okay,
getting
okay, okay.
35%. But not per year, per year and
Oh,
a half.
oh, so they're working on what their operating their operating profit is from the anchor yields.
Yes.
Got it, got it. Wow,
Dude,
interesting.
it's super. Dude, when I first saw this, I was like, that's pretty fucking genius, man. Like, you're locking a sum of money, which, for example, if you go to tell a banker, like, dude, give me, I don't know, 1 million and I'll give you 2%. They'll be like, yeah, maybe, why not? Like, interest rates are quite small now. So, but imagine if you put it here, you basically provide 20% liquidity if you stake it on Anchor. But for example, if you use it on Pylon Gateway and support all these projects, which are here, basically look at the APRs, 100, 200% for 18 months, 500%
Essentially,
for 18 months. Like,
yo, I've seen Valkyrie. I don't even know how you pronounce this. I've seen that
Valkyrie.
mentioned. Valkyrie. I've seen that mentioned so many times. So basically, if you invested via this, you will then earn their tokens before release. So it's almost like pre IPO,
Yeah.
or you're almost like an angel investor in
Yes.
in
Yes.
crypto.
Yeah. Exactly.
Wow,
But
that's
I,
really
I
impressive.
the
But
just
you know when I was talking to you about how important it is to
get
be
in
in.
early.
Exactly. And the early you get in, the more asymmetric the returns are. And this is what venture capitalists have been doing in the past decade or so, investing in, all of these um, uh, companies, like Stripe and Tesla and SpaceX and whatever else that are really great companies. So if
Yeah.
this was, yeah, if you're betting on the Terra ecosystem, you would be able to get an early sort of start, just like venture capitalists get an early start in all of these great companies.
Yeah.
Very, very impressive. Very. I'm
Very
happy
interesting,
you
dude.
you spoke about this one as well,
Dude.
because I've seen
First
the
time
name, but I actually never took out the time to actually look into Pylon.
I think, dude, and like I said, this is at the same time super scary, but also super interesting because again, if Anchor doesn't fail and it powers this whole ecosystem, dude, this will be a revolution in finance, I think. So Terra itself, just think about it. The whole thing with the Luna and UST being algorithmically generated, Anchor itself being algorithmically stabilized, they're doing some super interesting stuff. Basically, the way I think about it, they're doing what the banks should actually have done, which is basically set in place like an actual system that works and balances itself and not do shit with it. Because banks had the system, but I'm sure they went away from it. It is.
Fucking genius. Like, think about how many times a bank did a particular investment, right? And that investment yielded them 10,000, 1 million, whatever percent, right?
Yeah.
They could have taken that and had a stable yield and increased their fucking APYs that have been stagnant for the past decade, hovering between maximum 0.001 or whatever to 0.4 or 5 max.
Yeah.
You know what I mean? Okay, if you go like Switzerland or some crazy, places that accommodate millionaires and billionaires or whatever, I'm sure you get up to 5% or whatever. But the funny thing about it is that their greediness made them less efficient.
Yeah.
And if you were greedy in a smart way, you would probably. I don't know how to.
Everybody would benefit from it.
I feel like I'm missing the vocabulary to explain the thoughts I'm actually having regarding this. But my point being is, it's like, if you're truly capitalist, you would focus on things like this. You know what I mean? Like having these outsized gains and then bringing them back to level and offering your customers a better financial product. But instead, they kept it at 0 point whatever and took all of these yields, and now Anchor is coming in and disrupting what these banks have been doing so far, which is offering a stagnant product. And maybe they're the sort of bank of the future in that regard, in terms of where people want to hold their savings. Pretty fucking impressive, if you ask me,
dude. Yeah, and also like you said with the yield reserve. Like, for example, look at the crash in 2008. 2008. If banks had this yield reserve from all those fucking profits they made, they wouldn't have crashed. They would have been able to stand on their own 2 feet. But of course, they didn't have any yield reserve, because why would they? Because they just had profits, and then they gave it to their stakeholders, which is okay, good for the stakeholders, sucks for everybody else. The good part about crypto in general, but in this particular case, is that the chain itself is the company and the stakeholder. So there isn't anybody else to benefit but the chain itself. We are the chain.
Yeah,
I think this is pretty much the apex of decentralization, in the sense that this is not just another platform benefiting for itself, but it's benefiting for everybody.
This is incredible shit.
Yeah, right?
Yes, absolutely.
And I have I'll just go through another project, I think, or two maybe. No, I think this one. Yeah, obviously,
Keep it at one.
I'm not gonna. I won't mention Mirror because we already mentioned you can do basically assets in the real life. You can mirror them in the Terra ecosystem, whatever. Synthetics, yeah. The last one I want to talk about is loop markets, which loop markets is actually interesting. It might be bad in the sense that this is also a swap. So I think I said this uses Terra swap. I think this doesn't use Terra swap. I think loop markets is its own product, and I think it's also a DEX, but I'm not sure about this, so don't quote me on this. But what actually loop markets is a social media built on the Terra ecosystem. What you can do on Loop Markets is actually write articles, you get ratings, you get comments, you engage with them, and you are paid in their native currency. So basically, Loop Markets is like, it's like news, and basically you have meritocratic news. If people like your shit and they comment and they like it and you interact with them, you generate these coins. So yeah, I think this is maybe the one I'm invested the least, but I think it's also interesting maybe for the future. We'll see where this goes, you know.
Is it like a media, like
Yeah,
crypto
exactly,
media?
exactly. But again, it's somewhat meritocratic, because if the article has traction and interactions, you get paid out, which is, it's kind of
Pretty
cool.
cool. Yeah.
Yeah. Okay. And well, whatever. Yeah, we'll not do this one now. Probably do it at the end. So yeah. Okay. What was next?
So to less exciting topics, I guess, from that euphoric
I'm not sure, Jerry.
understanding of the Terra ecosystem, we wanted to touch on the was it launchpads in crypto? Because you wanted to touch
Let's
on
no, like you said, let's take it down a notch. Talk about the VIX, and then we'll go back to IEOs and launchpads.
okay. So what I wanted to talk about was just, obviously looking on the bright side of things is really important, but also looking at the potential risks, as we discussed in previous podcasts, is really important, and looking how you hedge against that. And sometimes your hedges turn out to be the biggest winners, actually, and not necessarily the ones where you were expecting the most optimistic outcome. So currently, we have uh, a big sort of whirlwind of issues, right? We have supply chain issues. We have um, product shortages. Um, we have semiconductor shortages. You
Energy
know,
shortage,
energy shortage and crisis. So there's a lot of
workforce
things.
shortage.
Yes, workforce shortage. So the encompassing sort of term that you can use to describe potentially what's happening or what will happen is a state called stagflation. And you can tell by the name of it, is obviously stagnation, and then inflation is in there. um, Stag obviously is referring to economic stagnation, i.e. low growth, high unemployment, and then deflation part obviously is from inflation, which is high inflation. And all of these things are working together to create that kind of environment. And the reason why this is happening is because of a mix of things. Obviously, I think we're feeling the impacts of um, lockdowns, and what this did to the supply chains, because you had um, COVID, COVID closures, I guess you could call them. So COVID stopped some ports or closed some ports. It reduced flights, not just flights for tourism, but also cargo flights, where they're getting over products. And in short, really, you have product delays, product shortages, such as semiconductors. You have port buildups, right? And then you have freight costs. And with natural gas prices going up, all of these things are really not helping the situation. And then just simple supply and demand. Now that there might be a post-pandemic recovery, we still don't know, but it looks like it's coming. You have a lot of demand coming in, but the ports are slowly recovering. And then you have you even have the evergreen thing. I'm not sure if you remember, a few months ago we had the evergreen
Yeah,
price,
yeah.
and
Evergrande.
No, not Evergrande, Evergreen, the
It
cargo
was
ship,
Evergreen?
the cargo ship that locked. Evergrande is the housing crisis in
No,
China.
was that a company? Was it Evergreen?
Yeah, no, Evergreen is what the ship is called.
Yeah. Oh, sorry. Yeah,
I,
yeah.
I
I thought
swear.
it was also called Evergrande.
Oh, no.
Hmm.
Maybe all of the biggest issues
Yeah.
will have ever in their name. Yeah, so you have all of these things sort of coming together because we still don't know what impacts this delay has had on the general um, movement of ships. And you look at several ports in the world, and um, they're all locked, so to say, and shut down. And the queues are massive. You have all kinds of stuff happening due to Brexit. So basically, what I'm trying to say is that you need a way to hedge against all of this. And when it all comes to a climax, and the way to do that is invest in the VIX. The VIX is the volatility index, which historically has always spiked around times where all of these things might have came to a climax, and
Mm-hmm.
um, and there's many different ones. I think you just have to check, what ones are available in your area. You would just have to type in volatility index, and you'll see all of the results. Um,
Yeah. Because there's
and then
multiple of them, and there's also ETFs of them. So yeah, you need to research which one you can buy.
exactly. So and it's pretty straightforward. There's really not much more to it than that. Volatility meaning that the actions of the stocks will be factored in, and they then determine your returns. And when all of this, turns into what we think it might turn into, which I discussed earlier, stagflation, um, the volatility a great hedge against that. Obviously, Bitcoin is supposed to be a hedge against that. So far, we haven't seen it. Um, at least in immediate terms, we haven't seen Bitcoin react to a massive downturn in the market positively, or as positive as the volatility index. So while Bitcoin might be a positive hedge against inflation in the long term, in the short term, it, and correct me if I'm wrong, it always went down pretty much. When inflation fears were high, it didn't actually sort of boost up. It actually,
Bitcoin?
yeah, it
Yeah,
went
yeah.
with it,
Yeah.
Whereas the volatility index, it always shot up when these things happened.
Yeah.
So yeah, we'll add all of the information to that in the description, and move on to our next topic.
Yeah, and what's interesting to be mentioned here is that, yeah, like you said, the volatility index spikes up when there is, well, volatility in the markets, and usually it's currently as at a really good level. It's around $16, and usually anything around 12, 13, 14 is basically its baseline. So maybe it wouldn't be such a bad call to buy some VIX just to have it on the side in case anything happens. I think this would be a good entry point. But maybe I'm not sure if now is the best moment to get it because we have earnings season, man. We're
Yeah,
having 4 weeks of earnings, and
yeah,
maybe not all of them will be good, but I think most of them will be good because
yeah,
actually spending has accelerated, and inflation aside, spending has accelerated. We had metrics regarding the volume sold by supermarkets and shit like that. So we had good volumes. So I'm expecting a strong earnings season for most companies. But maybe after the earnings season, you can get some VIX. But then again, after the earnings season, it's Christmas. I don't know. Yeah, maybe just have some VIX on the side ready, because when it does spike up, it spikes up really hard and really fast.
Yeah.
It can go 3-4x quite fast. So yeah,
Right.
if the crisis is big enough.
Hmm. I just wanted to add, based on some historical data that I will add uh, to this pod, the one of the best commodities to be investing in, or the types of investments to be investing in a period of stagflation, has been energy. And back in the day, at least, it was in particular for gas. But today, I would argue that, or in the future, looking forward, it will be uranium for all of the reasons that we mentioned in the previous podcast. And given that, a lot of countries are now moving towards openness towards nuclear reactors, and
Mhm.
yeah, so that's very bullish.
But just like we said last time, although I'm all pro renewables and shit, I think in the next at least short term, I think natural gas will take the win for the fossil fuels. And natural gas is somewhat cleaner than other forms of fossil fuels. So again, if we are to be honest with ourselves and realize that we have a need, we might as well be honest and admit which one is the cleaner one and which one is the worst one and shit like that. Obviously, I agree, nuclear, renewables, the future, but like we discussed, it takes years to build a nuclear reactor. In terms of movement and price movement, I think again, natural gas might be the winner for the short term, and
I would disagree.
hopefully.
I would disagree actually, because you would, in terms of natural gas, in terms of its usage and its widespreadness, yes, but not in terms of total returns. I don't think, because in percentages at least, because you think about uranium and you ask the question, what is more undervalued? And even in a crisis, it won't be natural gas. I mean, that's obvious that it's not undervalued. It's probably correctly valued, and will obviously, like you said, it will be the one thing that it's a quick solution. But in terms of total percentage increase, I don't think it would outdo uranium. Simply for the fact that uranium has been so shunned upon because of the narrative, that the current narrative about nuclear. But really, it is the most clean and carbon neutral option that we have.
Mhm.
So I
Sure.
don't. I think in terms of politically speaking, and in terms of usefulness for right now, this minute, it is obviously natural gas. But as an investment, I don't think it will outdo uranium. I don't think that's going to happen. Um, it's
I was talking strictly short term, but we'll see. I will say it has already gone up quite
Yeah,
hard.
but it's so
So
big. It's the basic thing that we use. Well, why would it outdo something that is so much smaller? Like the market cap of uranium isn't like so much smaller than natural gas. Like natural gas.
because our energy needs are increasing and we need increased regions to produce that energy, and you cannot build nuclear reactors overnight.
Yes,
So
yes.
as
I'm
long as
not.
the need for the good will grow up, of course the price for the good will go up.
Yes,
Because
I'm not.
even natural gas, it's not like you can find it. You walk on the street and you find some natural gas. No, it still requires a heck a lot of investment to actually dig it up and store it and shit like that. So people in the supply chain will leverage the usage, I think.
Absolutely. I'm not talking in terms of how useful it is, or how much people are going to use it. I'm talking in terms of market size. It's almost like saying Bitcoin is going to outdo some like super little coin or something like that. Crypto comparison, maybe not appropriate here, but you get my point. Natural gas is so much more. I mean, this is probably what's running in most of our homes here. So it's already so used. So why would it overtake something that is tiny in comparison? I don't think it is. But if we're talking of usage, like just pure usage, I would agree, but not in terms of performance on the market. I could be wrong though. We'll see.
Again, I mean, if you look at it, first off, natural gas has already run up, nuclear has already run up. I think nuclear might be a bit enthusiastic because there is some positive news in the markets. But again, in terms of, again, what actually matters, which is demand, it cannot go parabolic because, again, you need nuclear reactors in which to use it. The difference with natural gas is we need the energy now. We have the means to use natural gas. Natural gas usage will increase, and people who are supplying it and are part of the value chain can increase their prices because of the demand. So I'm thinking short term, natural gas might outperform nuclear. Maybe a few months, maybe a couple of years, maybe. Energy is definitely not my strong suit, but that's kind of the way I'm seeing it right now. But
I think we're talking in circles because you keep you keep going back to demand, and I keep going back to market cap. I just don't see, even with outsized demand for natural gas, it still doesn't change the fact that the market cap of natural gas is gigantic compared to the market cap of uranium. Therefore, even a moderate demand for uranium would outdo natural gas in numbers. I mean, I've seen natural gas break records recently, obviously, continuously. But I haven't seen any ETFs doing double digit numbers, like natural gas ETFs, like in days. While I've seen that in uranium. I can, show this in all of the in all of the stats. But yeah, let's move on from there before we, talk in circles. So
I just searched on Google, and apparently oil and natural gas has a market cap of 26 billion. Oh wait, no, this is something
that
else.
can't be
Sorry.
right.
No.
That can't be right.
Yeah, whatever. No, I thought it was something.
Wait before you put out misinformation like one of the commenters said one time. That guy on the right is spreading misinformation.
Yeah. Anyways, yeah. Cool.
Yeah, man. Shout outs to all the commenters.
Yeah. Mihai isn't here today, apparently.
She isn't.
Yeah.
Cool. So you wanted to circle back to some launchpads in crypto.
Yes. And I'll show my screen. Apparently today I'm super active, which is surprising. So yeah, I'll get to launchpads, but first off, I want to talk literally just a few minutes about how tokens are launched in the crypto space, because depending on your history in the crypto space, you might know of some, might know of others, might have been part of a scam, or might have not been part of a scam. I'm proud to say I have been part of a scam, whatever, rug pull scam, whatever you want to call it, in an ICO. Okay.
Correct.
Yes. It was just $100. It's fine. Basically, ICOs were kind
Kermit the Frog. We need to put Kermit the Frog right on your face when you said that. You know Kermit the Frog with when he was wearing the glasses and there's tears outside?
Yes. You can do it. You can do it in post-production, Jerry.
All right. Go ahead.
So yeah, ICOs were like the first innings of crypto launches. Basically, initial coin offerings. It was something. Right now, when you think about it, it seemed kind of crazy. You would basically send money to an address, and they would promise to give you tokens worth the money you sent at a random price they assigned. So yeah, that was, again, I haven't been part of a scam where I would send money and didn't get anything back, but I have been part of scam rug pull, where basically I sent some money, and after the shit launched, it tanked and it never recovered. It was like, and I think I spent.
Then we all been a part of that.
Yeah, but again, not at launch. Like usually, if the coin has some potential, it doesn't go flat at launch.
Like it
So
went to
yeah,
zero.
yeah, almost to zero and never recovered. Anyways,
Holy shit!
yeah,
That's the Mark Cuban shit.
yeah.
That was
Well,
the Mark Cuban
unfortunately, I'm not a
DeFi
billionaire.
degenerate.
Yeah,
And he got rug pulled, right? And then he's before he got rug pulled, he was like, "Yeah, DeFi is the greatest thing," and yada yada. And as soon as he got rug pulled, he was calling the SEC for regulation.
really. I haven't
Yes.
heard of this. Fuck. But yeah, I would understand though from his perspective. Okay, so after ICOs, and it was kind of proven because it was crazy just to send money to people. So people were like, "Nah, I ain't doing that shit. We need some more, let's say, oversight or security or validation." Then came IEO, which is initial exchange offering. Basically, websites, such a boomer, centralized exchanges like Binance would vouch for the projects they would launch. So you would have Binance be like, "Yo, guys, you have some money. I know a guy who's developing a project. You want to participate? Yes, no, maybe." You put some money in, you get the tokens. And for example, I think the returns for Binance with their launchpad, I think it's like 50x. So it's obviously super profitable and less scammy and better returns. And obviously safe because they also validate the project. So this is a super interesting way of printing coins, let's say, or releasing coins. The next one is IDO, which is initial DEX offering, which is decentralized exchange. This is where it gets even more interesting because this is happening on a decentralized exchange in the sense that basically what's happening here is you don't get the thing offered to you in a centralized exchange, but decentralized exchange, which means there isn't any oversight. And basically, launchpads are IDOs. And we'll get there in a second. And the other thing I mentioned, just like with Terra, is ISPO, which is initial stake pool offering, which is basically what I spoke in Terra, where you assign your currency to a staking validator, which at the end gives you their coins when they release. I'm doing this currently with Meld on Cardano. Just saying that. Okay, and now we get to the good part, which is launchpads. Okay, launchpad in a nutshell is basically it's a token in itself, and you buy that token, you stake it, and then they offer you the chance to participate in coin launching. And I have done a small analysis here. I have extracted this data from a website which is called CryptoRank. And look at this column. This column shows the average all-time high returns of the project they launched. So basically, this platform, Launchpool, has had 40x
Holy shit! You
average
did your
return.
research, bro.
Yeah, dude, this is professional shit. So basically, if you had bought all the projects released on Launchpool, you would have an average of 40x return. And obviously, if you want to be selective and you want to do extra due diligence, you can obviously do that. But just as an average, I think this is an amazing number, right?
Absolutely.
And okay,
So, I mean, obviously, past performance doesn't
yeah, of course,
doesn't tell future performance,
yeah,
but it is an indicator.
yeah.
So,
And
which ones of these are you like bullish on?
I haven't invested in any yet. Oh, actually, I have in one of them, but I won't mention it because it's not that great. But I just want to talk about 1 second about this, which is the tiers. Basically, all these platforms have almost all of them have one thing in common. They have tiers. Depending on how much of their coin you are staking, you get either lottery or a guaranteed allocation, meaning that you need to stake money of the coin itself in order to get the possibility to buy the new coins.
Gotcha.
And this is what I've done here is I'm trying to calculate which is the minimum holding for each platform in order to get either a guaranteed or a lottery allocation.
And then you also choose the platform that has the highest.
Yes, you can do.
ROI.
I can do. Yes.
This is genius. I didn't completely get that when you when we were talking about this on text, but it is genius.
Yes.
And you can use group economics if you can't afford it by yourself. You
This
can
is what
use
I'm trying
group
to do now.
economics, meaning you create a pool with friends, and then you all ape in it together.
Yeah, and honestly,
Genius.
my take on it is I'll try to do this shit super quantitative. I'll try to get as many guaranteed or lottery allocations as I can, because look at these averages, man. Like I can do with these averages. If I do even a bit of research and I can pick some of the winning projects, I'm sure I can get these averages much higher. Okay, in terms of like you said, which are the best projects?
ETHPad is ridiculous.
What do you mean?
ETHPad is just from a single glance, it looks like it's the best performing. Was that wrong?
Yeah, it's bad. No, I don't know why. It's probably just it doesn't interpret the X as a number, so it doesn't order it properly. Fuck that
It's
shit.
misbehaving.
But yeah,
Which
Yeah,
one
yeah.
is higher than ETHPad? Which one is higher than ETHPad?
No, ETHPad is the highest in terms of absolute returns.
So it is the highest. Okay.
Yes, but it's not the first ranked. Again, it's I'm not sure exactly. I think they based their ranking on the total money raised or the size of the platform or the I don't know exactly what they base the ranking on. But yeah, a Polka starter is let's say the best, the gold standard, because they have a lot of projects, which is relevant because if you have money blocked, it's relevant for you that they launch projects. But yeah, I think by far the best one is Polka starter. And
I'm
then
so underexposed to Polkadot.
oh no, I have some.
It's bad.
You might recognize this fellow here, which is called Accelerator, which is built on Radium. Which I think is something you might like.
Does the same thing on Radium?
Huh?
Does it do the same thing on Radium?
Yes, it's the same. It's the same mechanics. I don't think I have determined the minimum yet. Oh, I think I do. It's 150 Radium, which is I think that's quite expensive. I think Radium is expensive. Oh, I think it's like $50. Fuck, that's
no, that's like 1,500. That's not that high.
Okay, it's $10 and the minimum allocation is a 50. Yeah, it's 1,500. Maybe we'll go for this one as well. But
damn, my maths is good, all off the top of my head.
yeah, but I didn't know the price.
I'm an AI.
Yes, Jerry
Black AI.
So yeah, this is basically what I have been basically killing my brain for the past few weeks on, is getting the minimum allocation for these projects, pulling some money together, just getting these coins. I think this is super
man, you got
interesting.
my money. I'm aping it in. I'm aping it in with you. You
Nice.
sold me.
Nice, sold.
Yeah, man. Let me know the deets. I'm in.
Cool. Yeah, we'll talk about it. Maybe, who knows? Maybe some other people want to join. But yeah.
Any
like
millionaires that are watching, feel free to reach out. You know what I mean? To your boys, Legalized Robbery gang. You know the vibes.
Yes.
Thank you very much, Adi. Anything you'd like to add in closing? Because this is almost this is almost like a perfect take. This is like a one take episode. No network issues. No nothing. I think we could post it right away.
I'll just say this, dude. If the Terra ecosystem wins and it doesn't fail and it goes super, super, super high, it's not even about the fact that I'll be quite rich for my standards. It's not even about that. It's just the fact that I got to find out about it so early. I will be super happy about that, dude.
Oh yeah.
Because the way things are connected, it just seems like it's I use the term when I explain to people, it's beautiful, dude. Like in terms of
Beautiful.
technological and algorithmically, it's just beautiful. Yeah, it's art. It's art, if you ask me.
Yeah, man.
Finance art.
R.I.P. Leonardo da Vinci.
Cool.
He
Okay.
would have shed a tear of joy.
Yes.
I'm talking my shit right now. All right, we better close off the podcast before I talk too much shit. Thank you everybody for listening. Once again, another episode of Legalized Robbery, back and better than ever. And yeah, more regular episodes and more timely, I think. We'll try our
Yes,
best.
yes. We will.
Yeah, stay safe, do your due
Yeah, dude.
diligence,
You too.
and yeah, keep on rocking in the real world. Doop 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 doop
Wow. Toop
doop doop
toop.
doop doop.
Toop toop.
That's right. That's
Nice.
from Nardwa. All right, peace.
Okay.
Nobody move and nobody gets hurt. This is a stick up by Jerry and Adrian, the Legalized Robbery podcast.